The Airbnb jackpot is drying up. Recently, we've seen a slew of articles about the Airbnb bust, worrying that the good times are over, that hosts will be eating cat food as they await that once-a-year booking.
2 years ago, I bought a house in Palm Springs and renovated it. I'm not gonna sugarcoat it, you guys. We lost money. It's not looking good.
So in fact, it's more nuanced. Airbnb is playing out a concentrated version of the boom-bust cycle set off by a combination of lockdowns, followed by slash-and-burn interest rates at the Federal Reserve. The story starts back in March of 2020 when media went wall-to-wall on COVID in a coverage orgy that put the OJ trial to shame. Millions stayed home to save lives, but soon they decided New York is really boring if everything's closed. Some moved into their second homes, but most decamped to the suburbs where they could get a backyard, or to remote rentals where they could wait out the apocalypse. Back in 2020, I was driving through the New Hampshire mountains and saw scrawled signs shouting, "Lowlanders go home." This all drove Airbnb prices to the stratosphere. The second homes came off the Airbnb market, while the New Yorkers and the mass holes settled into long-term rentals, hogging those up. Airbnb hosts minted money. So what happened next is what markets always do. High prices brought new supply. With the Fed pimping 3% mortgages, millions of regular people looked at those eye-watering Airbnb profits, whipped out the pocket calculator, and decided they too would like a free house. So off to the mortgage man they went. This flooded the Airbnb market. In 1 year to March 2023, listings were up 26%. So that's a quarter of what they had built in the previous 13 years. Alas, the apocalypse ended. Pandemic restrictions gradually eased. Millions of renters could no longer hang out in Maui while supposedly working in Boston. That led to a glut with empty rentals and plunging prices. So in 32 of the top 50 rental markets, host revenue is now down 13% year on year. Across Airbnb, revenue is just over $1,000 per month, which is not bad, but it's not the $5,000 people were hoping for. And more important, it's not enough to cover a lot of the mortgages it took them to set it up. Meanwhile, hosts are having to raise their game, putting in amenities like high-end appliances and outdoor kitchens to get those Instagram moments, making sure the free shampoo, the soap, the towels are all arranged just so. Meanwhile, failing cities like San Francisco, New York, and Chicago are trying to outright ban Airbnb, who they blame for expensive rents because it's more fun than blaming themselves. So what is next? I don't think Airbnb as a concept is dead. It is a sound idea, especially for families, but the glut is going to take time to work out. Meanwhile, a looming recession could complicate things since recessions hit travel and leisure very hard. So just a few weeks ago, the Fed reported the $3 trillion in pandemic-era excess savings are about to run out, which could mean yet another exodus, this time of paying customers on Airbnb, leaving those hosts with mortgages to pay. The biggest takeaway is there's no free lunch. Airbnb, like everything else, takes a lot of work for the money, and like everything else, the Fed stands forever ready to screw it up. Okay, we'll be watching. See you next time.